Hello, my name is Gustavo Pacheco. I'm a real estate specialist and team leader of living premises. Today, I have invited a very good friend of mine, attorney Jonathan Alfonso from Title Answers, to join us live. Welcome, John. Why don't you go ahead and introduce yourself?
What's up, buddy? How are you? How are you guys holding up? How's everything over there?
We're good. We actually went to get the baby's like the sonogram today, and they had me waiting outside because they're only letting the girls go in one by one, so it sucks, but whatever. I got to see the baby pictures today, and that's pretty cool. What's up with you guys?
Good. Same, just at home. My wife and I are kind of rotating shifts with the baby. So, I'll typically do an afternoon shift and she'll do the morning. So at least both of us can have, 3, 4, 5 hours uninterrupted working. So it's good. Yeah. Same as everybody else, right? Figuring it out.
Awesome. So Johnny, introduce yourself. Tell us a little bit about you.
For everybody watching, I'm Jonathan Alfonso. I'm the managing attorney of Title Answers, a law firm, which is basically, we've been around now for about 7 years. Originally, it was Law Offices of Jonathan Alfonso. We rebranded it, obviously, since almost everything we do is real estate related. Been around now, been practicing law for about 10 years. So I kind of started my practice as we were getting out of the last bubble. And now we're getting into this one, which is, it's kind of interesting to see, now coming through the cycle again, starting to see some of the, obviously variations because we're in a different economy, but starting to see some of the shenanigans and things that we saw like 10 years ago.
Okay. How's business? Tell us, when it comes to closings, what measures are you guys taking to ensure everybody is safe, right, when we get to the closing table?
So what we've done is, number one, let's tackle my staff and employees. We have staff kind of rotating out. I myself, like I just told you, I'm coming in more. I'm getting in 6, 7 in the morning, and leaving like around 1 or 2. So my afternoons are more calls and working from home. And same for my staff. They're kind of rotating in and out, so we don't have everybody kind of here at the same time, and everybody kind of can socially distance. So that's what we're doing on the operations front. As far as business itself, it's actually been busy. It's actually kept going. I think being determined essential by the government was very important. I think another thing too is that I think there's just a lot of pent up demand. So there has been a lot of people working. And there's been still contracts coming in. We've seen an increase in refinances, and the last part is what we've done is, so kind of like everybody else, right? Like we're doing in this meeting. I think you and I would probably see each other before this 2 or 3 times a week in person, and now we're doing if I need to have any client meetings, they're obviously either by phone or through a Zoom call, and the only people we're allowing to come to the office are people that actually have to sign documents in connection with the closing. And what we've done is, so I own this building, and the space next door, I had actually just vacated it. In the space next door, we set up a conference room table with 4 chairs. That space is vacant. So really, if somebody comes in, what's happening is if they need to come, we have them sit next door. We kind of have the package already pre-marked. We'll kind of sit them next door, take over the package. They come in and we tell them to sign everything. If they have any questions, we tell them to meet us outside, and we kind of handle it like that. So it minimizes interactions. And once they leave, we Clorox down that table and the chairs, and since nobody will probably come in for another 2-3 hours, it gets the air out, and it kind of protects everyone. So that's how we have adjusted to this new landscape of business.
Wow, that's great, amazing. So let's get down to the reason why we're here. It seems like everywhere I turn, everybody's talking about mortgage forbearance. That is why I have asked you to please speak to my clients and friends. It is very important that everybody fully understands how mortgage forbearance works and how it could impact their life. Hi, babe. We have a special guest. My wife just walked in.
What's up, Gotti? She's camera shy.
So hold on. And I do understand that there are people who have lost their jobs no other option but to call their bank and ask for forbearance. Yet before you do, I wanted you, John, to come and talk to us, because not only are you my personal attorney, you are a foreclosure specialist and the preferred title agent for our team. So I believe it's important to have somebody come that has the experience to get clarity on this subject. So John, what is forbearance? What does this mean?
All right, so let's start first with what is forbearance. The plain definition of forbearance is very simple, right? It's just that, you know, a party is not exercising a legal right. How are you? How are you doing? Where are the pictures of the ultrasound? You got to show those to people afterwards. You got to upload it.
Sure, I'll put them in.
So going to forbearance, right? Forbearance is somebody not exercising a right. So it's very simple, right? Like let's do it between you and I, right? Let's say I owed you $100 and we had a contract and you had the right to collect. You can state, hey, Jonathan, you owe me $100, but I'm not going to exercise that right to collect the $100 right now because I understand what's going on. That's basically what forbearance is, and it's what banks are doing. Preparing for this call, and honestly, I've had it flagged for like 3-4 days now. I've had the CARES Act flagged, and I wanted to read, about the forbearance. What people have to understand is the forbearance is just the lender, the bank, your servicer, whoever it is that you're in contact with, is basically turning to you and saying, hey, we're entitled to collect these payments right now, but we're not going to collect them. All right, that's plain on its face what it means. The follow-up issue is, how do we resolve that, right? So going back to the simple situation between you and I, right? I owe you $100, and you told me, hey, John, I don't need, you don't need to pay me the $100 today, right? Even though I could collect it. The question is, how are we going to resolve that? And I think for purposes of homeowners, we have the same issue, right? So the bank is tending to, basically the government has put out the CARES Act, and they have said, we want any federally backed mortgage loan, which is about 70% of the loans in America. We lenders are going, and servicers or whoever is managing those loans needs to offer forbearance, right? Now the question is, and I think this is really going to get, to what I think really provides value to your audience, right? To your past clients, your sphere, everybody that's watching this is, but what's the next step, right? How are we going to resolve that later on? And that's where I think all the issues start to happen, right? Because that's where I think people really need to kind of think that through.
Okay, and the $1 million question, okay? Will the government make these mortgage payments disappear?
Absolutely not. Absolutely not. I mean, that's not what they've said. I mean, you can read the act, and if you want, I think I'll send you a screenshot. I mean, it's really only a page and a half. The only thing the government has put forth right now is a mandate. And if you read the mandate, I had it on one of my screens, and I took it down. If you read the mandate, what it basically says is, if it's a federally backed mortgage loan, the servicer needs to offer the homeowner an extension of forbearance of up to 180 days. Now, remember, up to. What I'm hearing and what I'm kind of seeing, and what makes it very difficult right now is that this just got put out there, right? So, going back to what's going on with the virus and all of us, right? We're all operating right now in new waters, right? The market's different, everything is different, and we're all learning how to navigate that. So the CARES Act was just passed a couple of days ago, and the government said you need to offer them up to 180 days in forbearance, and they can then request an extension up to 180 days more. So all in all, you could get up to a year. Now, the problem is this is kind of working its way through the market, so we haven't really seen how banks are implementing. What I am hearing and what I am reading is that what servicers are doing is they're coming out and saying you can get an extension, you can get a forbearance up to 90 days. So it seems like the lenders have taken this directive and they're trying to do it in 90-day increments. But we don't know what happens. But you have to understand, forbearance just means I'm not going to collect right now, but at some point we need to figure out how we're going to handle this. And that's where I think the issue lies, because what's going to happen? Let's say they give you 180 days. Are they going to come back at the end of the 180 days and say, now you need to pay 6 months? So let's do an example of $2,000 a month in mortgage payments. If it's $2,000 a month times 6 months, you have to pay $12,000 now. Are they going to put it towards the end of the loan? Because that's another option. Another option is they could say, listen, since we didn't collect these 6 months, what we're going to do is just put them at the end of, and let's assume it's a 30-year mortgage. We'll put it at the end of the 30-year mortgage. Maybe that's what they're going to do. Or maybe the other option is, let's maybe put you on a payment plan to pay those $12,000 over the next year or two. You know, and these three examples of what I've given you, right? Whether they ask you for the full amount at the end of the forbearance, whether they add it to the end of the loan, or whether they do some sort of payment plan, that's most of the time what we've seen with these forbearances. The only thing is, you know, to answer your question, are these magically going to go away? I don't think so. I think they're going to do one of those three options because that's typically what has happened. Now, could the government come back and do some sort of addendum to the CARES Act and add some sort of other type of relief? That's a possibility. If I'm a homeowner, I'm not going to stop paying my mortgage on the hope that maybe they pass something. I mean, this is what I've been telling people just very simply. What the stimulus bill that they passed, what were they able to do? Give each family $1,200, which we can sit here and debate whether that's enough money, whether that's going to help, but that's the number that was pretty much agreed upon. A mortgage payment is $2,000 a month, right? Let's say. So times 6 months, you think the government's going to be able to come up with $12,000 per homeowner? That's a lot of money. That would, I mean, now we're talking a couple trillion more. You know, I don't see it. Obviously, anything could happen, but it does not mean it goes away. And if you read the act, the way it's enacted, all it's providing for is simple forbearance, which means give these people 6 months where they don't have to make their mortgage payments and don't charge them any late fees, penalties, or otherwise prejudice their credit.
So I've been reading a lot, and there's a gazillion different scenarios. One that I read was that they would, in a way, refinance and just make all the payments even throughout the whole loan. But it's just there's not enough clarity right now on what's going on, you know? So everybody's confused. I've also heard that people call the banks and they say, listen, we're gonna give you 3 months, but you gotta pay us the 3 months at the end plus your 4th month, right? So I don't know how that helps, because imagine if you can't pay for 3 months, how are you gonna be able to pay 4 in the 4th month? You know, it doesn't make sense. So
yeah, and look, and here's the issue, right? And you said it at the beginning, and you said it correctly, right? I think, listen, if you just got laid off, you're in a very tough position. Like you're figuring out how you're going to make it through the next month financially. You have no option. You have to take the forbearance, and you're going to have to figure it out. You know, the issue that I see, and this is going back to what, you know, I saw during the last crisis. You know, during the last crisis, we saw it with the modifications. Because what starts to happen now is, and I'm already seeing it, is you start to have these issues where, and you and I see it, where it's like, oye, mi primo, okay, me dijo que no hay que pagar nada y lo van a perdonar, and then, you know, one person hears that somewhere, and then, you know, it kind of a game of telephone, and then it comes back to me where somebody's calling me and saying, no, my whole family, none of them are paying their mortgage, and they're getting the payments forgiven, and so they stop paying their mortgage. Well, I want to get the same benefit. And the reality is, this doesn't exist. It doesn't exist. So now you stop paying your mortgage. And like you just said, month 4, the bank comes back. Because what a lot of people don't realize is what's gonna happen as part of this process is the bank is gonna ask you to prove your hardship. And they're gonna ask you also to prove your financials. Because they're not just, right now the CARES Act says you can request an extension, and all you need to do is sign this simple certification saying, I'm having a hardship due to the coronavirus, and you get the forbearance. The problem is now, for example, going to what you were just bringing up, right? Are we going to refinance or modify your entire loan for the rest of the duration? The bank is going to say, oh, hey, Gustavo, I want to see some paperwork. Let me see how much money you're making. Let me see what's going on, because they have to ascertain their risk, because you have to determine, going back to the simple scenario between you and I, right? Let's say I owed you $100. So you say, oh, hey, John, it's okay. Pay me back in a month. That's fine, right? But now if I'm going on month 3 or 4 and I haven't paid you back, you're going to say, oh, hey, John, let me see what's going on. Because then let's say all of a sudden now you see me out in the street and you're like, oh, hey, John's driving a BMW. But John owes me $100, right? It's the same thing that's going to happen with your mortgage. The lender's going to turn to you and say, oh, hey, we want to see some financials. We want to see if you're even making money. Because if you're not even making money, forget about why are we going to spend all this time trying to modify your loan? You're going to end up in foreclosure no matter what. You can't pay it. So let's figure something else out. And maybe the option is, maybe you need to go to Gustavo and list your house and just get rid of it because you're not going to be able to carry it. So that's what people don't understand is at the back end of it, it's going to happen. And what really concerns me, Gustavo, is for, you know, clients of yours that may get misinformation and they may have somebody approach them and say, "Hey, you're not going to have to pay the mortgage." And then they listen to it and they don't think this through. And now what ends up happening is they haven't paid 5-6 months. The lender comes to them and says, "Hey, you need to pay the full amount." And now it turns out that they were spending the money, or, you know, they didn't save it. They didn't set it aside. And now they find themselves in foreclosure. That's exactly, I saw a lot of that during the last downturn, where a lot of people stopped paying, thinking they were going to get their mortgages modified, you know, kept living, weren't saving the money. And then all of a sudden now they hadn't paid their mortgage in a year. They hadn't saved the money. They couldn't come current. And now their credit is ruined. And now they find themselves in foreclosure. So, you know, that is my concern.
Well, let me give you a little example of what happened to a customer of mine during Irma. They gave 3 months of a deferment or forbearance. I don't remember which one it was, right? So my customer didn't read the paperwork, didn't see the whole black and white document that they gave him. He just signed because he said, "Okay, you know what? I'm getting 3 months without having to pay my mortgage. They'll just tag it at the end of the loan." Fast forward 2 years, it was about 4 months ago. We get the property, we list it, get it on the contract. 5 days before closing, boom, I get a phone call. "Gus, we have a big problem." What happened? Because it's 3 months, not only are they charging us the $9,000 for the mortgage, but now they're putting an extra, I believe it was like 13 grand of fees and interest that we have to pay. We can't close. And I'm like, "What do you mean we can't close?" "Yeah, because that was the equity we had in the property." So long story short, he ended up closing either way. You know, everybody helped out to make sure that he gets that paid off, that he had. Yet it was unfortunate that they didn't go ahead and read these documents the right way and make sure that what they were signing is what they wanted to do. So this is another reason why I brought you here, so that you could help us understand that, yes, it might look like they're gonna help us out and stuff like that, but we don't know what's gonna happen in that 4th month, right? That uncertainty. So pretty much make sure that you see what you're signing and what you're doing, right? Because you don't want to be in the scenario like this gentleman, a good friend of mine, where he pretty much lost $21,000 for getting 3 months of not being able to pay the rent, you know? So, yeah. Now, let me ask you.
Look, you just Gustavo, you just touched on 2 very important issues there, right? Number one is you need to actually read everything that they're giving you, because right now we know that, okay, your payments are going to be, they're not going to exercise the right to collect those payments, but that's got to be figured out, right? Which is, you need to read everything that you're doing. I myself, I mean, I did a video yesterday on this, and then you reached out to me and you were like, "Man, I want to have, you know, a conversation about this with you on the Zoom call." And we started talking about it. In preparation for me doing my videos, I went on to my mortgage, right? So my mortgage is usually paid like 2-3 months in advance because I just don't like to think about it. Listen, during the last downturn, I decided to mess around the same way some people did and tried to renegotiate my student loans. My credit took a hit. I ended up spending, you know, a couple of years fixing that. I protect my credit with my life now. So my mortgage is always paid 2-3 months in advance because I don't want to think about it, and it's there. But I logged in and I saw the COVID thing, right? And I'm like, let me click. Obviously, I couldn't go through with it because I didn't want to. But you just have to press 3 little clicks, I think, and boom, you're in forbearance. You don't know what that means, and then of course, all of a sudden, you start to think, "Coño, let me, you know, I didn't have to pay it," and then, man, I'm at Target. There's a Nintendo Switch. Let me buy one, you know, and then you start to blow money. And I understand. I was around during the last downturn. I've seen how these things happen, but, you know, for your clients, I cannot stress it enough. Please, you know, read everything that you are signing. And then afterwards, because my understanding is these things are going to happen quickly. Then they're going to start to send you paperwork in the mail. You have to read all that paperwork so you can understand how it is that they plan on moving forward after this forbearance. And going back to your client, that's an excellent example, right? He did it. He forgets all about it. And then all of a sudden, it turns out there was a bunch of fees associated with this, and it's hurting them. There's another unintended consequence that people don't think about. when you go into the forbearance, it's very simple, right? So most loans that are made to homeowners, remember, there's a reason we have Fannie and Freddie. These are the big government, these are the big government groups that are set up to keep liquidity going on in the markets, and they sell loans by the thousands. Now, what ends up happening is, now to make this example simple, let's say they have 1,000 loans, right? If you get forbearance requests on 30% of those loans, right? So going with my example, let's say it's 1,000 loans that you have and 30% request forbearance, 300. Those 300 loans are the 300 loans now that you're going to audit, because you're going to say, these people, by claiming they have forbearance, have told me they have difficulty. So now let me see what's going on. Going back to the example with you and I, right? Like, let's say I owe you $100. Let's say you had 1,000 people like me that owe you money, right? So if you have 1,000 people like me that owe you money, well, and 30% of them, are asking for help, you're going to have to now vet those 300 people. And the banks do that. And not only do they vet now your ability to pay, they're going to have to vet everything else with the property, because they're wondering, what other risks do we have? So going to your Irma example, one thing that happens after the hurricanes with the forbearance that we've seen before is the banks will come back and say, yeah, you can have the forbearance. Then it ends, and they're like, wait a second, for this to come current, oye, Gustavo, let's say the property was in your client's name, right? Whatever his name is. Hey, you want to come current, but we also realize you quitclaim deeded the property to your aunt, and you're no longer on title. We can't have that. We can't allow you to come current because you're also in default by having transferred the property. And a lot of people, after they purchase properties, do quitclaim deeds and things like that, and they don't think about it. And now all of a sudden the lender's telling you, well, we can't rework anything because you have these other people on title. That's just one example. The other thing that comes up, and this is just getting into another point altogether, is what ends up happening. So the CARES Act covers what happens if, with regards to the mortgage payments, what do we do about taxes and insurance, your escrows? That's another issue that isn't covered. How are we going to handle that?
Oh, yeah, very good point. Very good point.
So let me continue with that thought and explain something that people may not realize. So taxes and insurance still need to be paid on the property. And if you aren't making payments and you aren't making payments on your escrows, a lot of people are asking, how are we going to handle that if we're not going to take payments for a year? Because if you're talking about a year of forbearance, you're going to have insurance and taxes coming up on properties. So if you have, going with my example, if 30% of the borrowers in a pool of loans are saying they have issues, the bank now on those loans is going to have to dig into its pocket, right, and pay taxes and insurance because they're not collecting escrows either. So how are we handling that? So to make it very simple, let's go to the example that I was saying between you and I, right? So I owe you, Gustavo, $100, right? And now you tell me, oh, it's okay for a month. Imagine now I come back to you and I say, oh, hey, Gustavo, bro, let me $10, bro, because I need that money to go, I need that money to take a bus to work so I can make money to get you your money, right? Now, it seems simple enough in my example. It's like, I'm sure people are watching, hey, Gus, why don't you give him $10, man? Help the guy out. But now think about it in terms of a pool of loans. Imagine if you have 300 people like me that owe you $100 and we're all saying, oh, hey, Gus, give us $10. Now you're $3,000. Now, the reality is that, and I understand that, we tend to think, oh, hey, the big Wall Street groups, the banks and all of that, like they have plenty of money. But the reality is you're talking millions and hundreds of millions that are out the door. So the reality is these pools of loans are 10,000, 20,000, 30,000. So if you have these servicers paying everybody's property taxes and everybody's insurance, you're talking about $2, $3, $4 million a month going out the door. Money starts to dry up very, very quickly. So you can bet yourself that these servicers are going to audit these loans and try to figure out which ones are risky, which ones are less risky, and they're trying to figure out what's going on. And that's a consequence of all of this that is happening out there in the market. So I know at the end of the day that most of us are thinking, how do we survive ourselves? But I want people to understand that there is a lot in play here, which affects and kind of ripples through the market, and which is what makes it difficult, for us to just come out and say, hey, everybody's mortgages, you're not gonna have to pay your mortgage for a year. Don't worry about those payments. That's never gonna happen. When you understand all these different facets of how the system works, you can see how complicated this issue really becomes to put into practice.
So watching your video, you said something very important that, okay, we talked about the refinances. We might not be able to refinance later. Yet, what if in a year or two things stabilize, everybody's back to normal, and you want to go buy another property? You had this forbearance in your record, and you claim for it. How are you going to go buy another property? So, would banks lend you money now because everything got better, knowing that we had a forbearance last year? Maybe that's something that could halt the whole purchase maybe in the future if you're trying to do something, an investment, whatever, and that's another scenario that you gotta keep in mind. You get me?
Yeah. So right. So it's just think about it in the simplest terms, right? When you start to go into an economy like the one we're going into right now, think of credit as like a bubble, right? When we were coming out of the last recession, like the amount of credit you could get was this big because it was very limited, and it grows and grows and grows and grows and grows. And as you and I have been talking about, like the last 3 years have been great because the bubble of credit, the types of loans and programs out there is this big. Once you go into what we're going to, where there's less credit and less liquidity, it starts to contract again. And I just, I can't answer that question as to whether or not people are going to be able to buy if they just had a forbearance. My gut tells me that it's going to be more difficult for them because the guidelines are going to be such that they're going to want to see some sort of record. And if you just had financial hardship a couple of months ago, now you're asking for a new loan. I don't know how underwriting for all the different loan programs are going to look, or how they're going to look at that. Experience tells us most likely they're going to say you're not going to qualify for the loan because you had a forbearance on your record. I mean, you were just basically telling us 6 months ago you couldn't make mortgage payments, but now you want to go out and take out a new mortgage to pay $3,000 a month. Are you fully recovered? Are you stable? Remember, this all comes down to risk. And I think a lot of people aren't thinking that through. Going to that example, I myself, my wife even asked me, she's like, oh, she was watching the news. She's like, are we going to do that? And I was like, hell no. I am doing everything possible to aguantar every last dollar that I have and make it through all of this, right? If, things start to get more difficult, and be very savvy with my money, because I think on the tail end of this, fast forward like a year from now, we're going to see record low interest rates. That's my personal opinion, for everybody out there. That's not the Bible. That's my personal opinion. I think there will be an opportunity, and I want to be able to refinance all the different properties that I have, helping my mother refinance. I'm helping everybody in my family refinance all the different things we have. And we're going to need very good credit to be able to do that. I don't want a forbearance on my record tarnishing our ability to do that.
Right. And for the perspective of someone who survived last boom, what advice can you give us on forbearance, and how could it impact us in the future, right? So thinking back then, seeing what happened then, right? What can you give us some advice? Give us some light,
I mean, look, going back to something I said earlier during this call, right? Be very careful what you listen to. In these times where things are uncertain, where things are moving fast, where there's a lot of, I mean, listen, we're all, whether we want to. I am literally looking at CNN on my TV, whether I want to or not. I have to look at this every day because we all don't know what's going on, and we want to stay on top of it. So there's, a lot of, and that's a perfect environment for misinformation. Coming out of the last boom, what I saw is, look, one thing that'll stick with me from the last boom was I worked at a firm. So I started out doing foreclosure defense, where we had probably like anywhere from 3,000 to 5,000 foreclosures. I forget the number. People used to meet with me and they would show me their situation, and I would be like, look, that they had heard whatever they had heard, that, they were going to get their house for free, and el banco le iba, tú sabes, perdonar el préstamo, and all these lies that were out there. And people would come and they would sit with me, and I'm not even, I don't think I'm exaggerating, Gustavo. Like 1 out of every 3 meetings, I would have somebody in the meeting cry with me, because I was literally telling them, look, you're going to lose your house. Now, as an attorney, I can help you lose your house on your terms. But, there's no miracle, that's going to make this debt go away. And, then, half the time they would be like, no, but I heard this. and they had heard, some attorney promising them the world. And, I would say like about 20% of them would leave, but like a good chunk of those would come back to me afterwards. They were finally losing their house at the end, and they're like, could you please just help us at this last step? Because yes, we went to somebody else, the attorney misled us, and we're losing our house anyways, just like you told us. And so, what I learned from that is be very careful about who you trust right now. I think right now it's very important to have individuals around you that are willing to give you information. Like you, right? You're putting me out there. Why? So you can give your whole sphere, your clients, everyone, someone who's done this before, so they can have this information for free and they can kind of listen to what's going on, as opposed to people that are out there. What I'm really afraid of right now is, the individuals that I saw 10 years ago that were charging homeowners $3,000-$4,000, to do nothing because the homeowner was going to lose their house anyways. And, how are they doing this? With good sales and marketing and a good amount of lying, telling people, hey, pay me $3,000. I'm going to help you save your home. And the reality is there's not much that can be done. So, I would be very careful of who you trust and what's out there. Do your research. I mean, it's 2020. You have so much information at your fingertips, and you have so many professionals like you, like myself, and so many others, right? There are true professionals out there that can provide information to them. But, get that information, understand what you're getting into, be very mindful of anybody promising you the world right now. I mean, we're literally in an environment where money is disappearing from the stock market by the second. And you mean to tell me that banks are going to just turn around to everyone and say, oh yeah, by the way, you know what, Gustavo? 12 months of payments on us, buddy, on us. I just don't see that happening. I mean, look at another example. Look at what's going on with these PPP loans, right? Which were meant to help all these small businesses. What was one of the first things that came out? Bank of America got caught on day one because Bank of America came out and said, yeah, we're only going to process applications for the people that owe us money, because let's help keep them afloat so Bank of America doesn't lose money. That's pretty much what I have been led to believe is kind of going on there. So, if you're a homeowner and you think, I'm going to get 12 months of mortgage payments, that's a very, very grandiose, assumption of what is going to happen. The reality is banks are going to give you some breathing room and help you figure this out. But, forgiveness, I don't see that happening.
Amazing. Johnny, thank you so much, brother. It's, you brought a lot of clarity, at least to myself, and everybody else, I'm sure, is going to be happy to hear this information. If you want to go ahead and give some information about yourself, how can they reach you? If they have any more information, go ahead.
No, well, first of all, thank you for putting this on together. I think what you're doing is amazing. Please keep doing these videos. I think, I saw the last one you did with Carlos and the accountant, and it was very helpful. I think right now, we're all at home. We're all trying to figure out what's going on. I think a lot of, what's out there is, very sensationalized. I think it's nice to have real conversations with real people about, real experiences. That's what we want to hear. So, please keep doing it. For those of you watching out there, I'm sure Gus is going to tag us, but I mean, we're pretty easy to find. All of our social media handles are Title Answers. So you can find us on Facebook, Instagram, or LinkedIn. And, we are also trying to put out weekly updates and trying to give people information. And by all means, if you think, we can help you in any way, shape, or form, feel free to reach out to us. But Gus, yes, thank you so much for hosting, and please keep doing these videos, brother. Stay safe and take care of Cady, okay?
All right, my brother. Have a good one.
You too, brother.